All right, so you are provided with the information for Mulenga and Company Limited at 31st December 2018. Okay. So we've been given this information here, this company. All right, and all in all, they're asking us, we need to create a trial balance, statement of profit or loss, and a statement of financial position for the company. Okay, so first things first, we're going to make the trial balance. Get your papers and pens. I just want you to draw this diagram here. This diagram will help you whenever you are dealing with these trial balance questions. Okay, dead click. All right, expenses. On the debit side you have expenses, assets, drawings, on the credit side you have liabilities. You can just write this on your papers: liabilities, income or revenue, and capital. Now here we're dealing with a company, right? We're not dealing with a sole trader, so instead of capital we'll call it equity. Okay, colleagues? Sole trader, capital. The companies, we call it equity. Okay, so this diagram is going to help us make this trial balance, because we have to put each of these accounts in the correct side of the trial balance. All right, yes. So this is how you do it. First, we've got ordinary share capital, 15 Ngwe shares, 120,000. What this is telling us, colleagues, ordinary share capital, this is the money that has been raised from selling shares. Okay, so this is your equity. Okay, so since equity, here where there's capital, we also put here equity. Equity is on the credit side. Okay, equity is on the credit side, so you put this ordinary share capital in your trial balance credit side like this. Okay, your trial balance, you have to have a debit side and a credit side. Okay, so you start ordinary share capital credit side. Okay. Yes. Is that a question? Ask your question.
Yes, I was asking, you said prepared capital, money raised from what? You are breaking at some point.
Or money raised from selling shares. Money raised from selling shares. The next one, we have preference share capital. Okay, now this is money raised from selling preference shares. Okay, so also this falls under equity. Okay, and as we can see with this diagram here, equity is on the credit side. So this preference share capital you put it on the credit side of the trial balance, 40,000. Okay, here basically we're just following the double entry rules.
Excuse me, what topic are we looking at?
The trial balance, then financial statements. So it's like two topics in one question. Any other questions? Okay, so this preferential capital will go on the credit side of our trial balance. Okay. Equity accounts have a opening balance on the credit side. These are the double entry rules, colleagues, all right? Next, we have free land and buildings at cost. So this is a non-current asset. Okay, an asset which you can keep for more than 1 year. So assets on the debit side here. So this 460,000 will go on the debit side. Okay, so this 460,000 debit side of the trial balance. Next, provision for depreciation buildings. All right, this is a contra asset account, meaning it reduces the value of an asset. Okay, so since assets increase with the debit, so anything that reduces the value of an asset has to be on the credit side. So this provision for depreciation, which is also called accumulated depreciation, goes on the credit side. It's a contra asset account. It reduces the value of our non-current assets. Okay. Any questions? Next, debtors, non-current asset. Yes, you can ask your question.
Yes, good evening, sir.
Good evening, sir.
I just wanted to find out, why are you crediting the provision for depreciation? Why is it being credited?
It's a contra asset.
Because it's a non-current asset, so I wanted to find
Yes, provision for depreciation is a contra asset account. It reduces the value of an asset account. So a contra asset account acts in the opposite way of an asset account. So asset accounts, their normal balances are on the debit side. So a contra asset account, its normal balance should be on the credit side. I hope I've answered your question, sir. Okay. It is a contra asset and it reduces the value of assets. Debtors, non-current asset, people who are owing us money. You can see asset is here on the debit side, so debtors will go here, debit side. Creditors, people we owe money. These are liabilities, okay? Current liabilities. All right, so liabilities, you can see it's here on the credit side, liabilities here. So creditors, as even the name just suggests, just when you just see creditor, just think credit side. Okay. Yes, but they are a liability. Okay, non-current, current liability, meaning they have to be paid within a year. So liabilities, then their balances are on the credit side. Cash at bank, this is also a current asset. Okay, and as we said, assets, the balances are on the debit side. Okay, this diagram I've drawn here, these are the double entry rules. Okay, so we're following these rules in for placing these accounts. Stock, 1st January 2018, this is opening stock. This is also a current asset. Okay, it's also called inventory, so it will go on the debit side. Sales, this represents revenue. Okay, we can see here on our diagram here where there's I, this is income or revenue. Any income or revenue. Okay, so this is going to go on the credit side.
Sorry, sir. So for the stock, does it fall under the asset or expense?
It's a current asset, madam. Have you heard, madam? It's a current asset. Sales, sales already credit, we already put on the credit side. Discount allowed. This is when you offer your customers a discount. Okay, so it means they are paying less. Alright, so since they are paying less, you treat that as a loss on your side because you're getting less money, and losses are treated like expenses. So we can see on the debit side we have expenses. So discount allowed, debit side, this is a loss which is treated like an expense. Discount received. Now this is the opposite. Here you are receiving a discount from your suppliers, so you are paying less, means you're saving some money. Okay, so that saving is also treated as a form of income. Okay, since you're paying less, so there's an amount that you've saved, so that is also treated as income. So discount received is going to go on the credit side. Purchases, this is an expense when you're buying goods for resale. Expenses are on the debit side here. Okay, so we're going to debit purchases on our trial balance. Okay, so the purpose of this trial balance, I forgot to mention earlier on, is to make sure that the journal entries that you recorded earlier on and the postings that you did to the ledgers are accurate. Okay, because before a trial balance is made, you have to record the transactions. and then you have to post those transactions into the ledgers. Okay, so this trial balance, it's a check to make sure that you did the postings correctly and you recorded the transactions correct. Okay. Yes. Carriage inwards, this is the delivery expense. Okay, for example, if your supplier brings goods to you, okay, and they charge you that transportation fee, that is carriage inwards, so it's an expense. Expense on the debit side here. Carriage outwards, this is the expense you incur when you are delivering goods to your customers. Okay, so this one also, since it's an expense, you debit it too. %, debentures, this is a loan, non-current liability. Okay, so liabilities, the balances are normally on the credit side, so you credit. Okay, a debenture is just a loan. Okay, it's a fancy way of saying loan. Debenture interest paid, this is an interest expense. Okay, and as we can see from our diagram with the double entry rules, expenses are debited, so you debit. Administrative expenses, we can see this is already an expense, so you also have to debit. Even salaries, another expense. Preference dividend paid, this is also an expense. You are paying the preference shareholders. Then profit and loss account balance, this is also called retained earnings. Okay, so this retained earnings, this is the profit you keep. After you make profit, you don't use all of that money, you keep some of it. Okay, that is what we call our retained earnings, and this falls under equity. Okay, retained earnings account falls under equity. All right, so this, as we can see according to our diagram here, equity is on the credit side, so you credit. Any questions, colleagues, before we now balance up our numbers? Already made there. But any questions? So the trick is just have this diagram with you, okay, and know the type of accounts you're dealing with. Okay, that way you are going to allocate each account properly.
So I think we hit on the discount allowed and discount received.
Discount allowed, you give a customer a discount. It means they are paying less, right? If you say you sold goods for 100 kwacha to somebody, okay, and then you said, okay, we're giving you a discount of 30 kwacha. So it means when the customer is paying you, they're paying you a 70 kwacha, right?
Yes.
So that 30 kwacha, you've lost it. So you treat it as an expense. Then if we go to this, yes, then discount received, you are supposed to pay your supplier 100 kwacha. They've given you a discount of 30 kwacha. It means you're paying them 70 kwacha. So that 30 kwacha which I've saved is treated as income. Yes, so usually the accounts with the name received, always just remember this is an income account. Okay, even receivable, if you hear income receivable, rent receivable, those are also income accounts, so you put on credit side. Okay, so we just total up the balances. The debit side has to equal the credit side. Okay, debit side 640,400. Credit side 640,400.